So if I were buying 5 dividend stocks this month, which, by the way, I am, what 5 dividend stocks would I buy? What's up, you guys? Welcome back to the Average Joe Investor channel. And in this video, we're going to talk about 5 different dividend stocks that meet my minimum dividend stock criteria that are definitely a great fit for my portfolio because I already own most of them, but might be a great fit for you as well. In this video, I'm going to share with you exactly what those 5 different dividend stocks are. I'm going to share with you exactly why I picked them, the specific criteria, including the number of years they pay dividends, their current dividend yield, their dividend growth rate, and maybe most importantly, their dividend payout ratio based on free cash flow. And make sure you stick around all the way to the end of the video because I'm going to include a 6th bonus dividend stock that I don't currently own in my portfolio that I might be taking a second look at that I've previously said no to in the past. And we're going to take those 6 different dividend stocks and we're going to test them against each other, both on the trailing 12 months of dividend income after the 5th year and the portfolio balance based on a monthly contributions. And we're going to also look at a lump sum. If you did a lump sum investment in one of these stocks, what would it look like after 5 years? You guys know me, and if you don't, you're going to quickly find out I love talking about dividend stocks. So without further delay, guys, hit that like button, hit the subscribe button. Let's get started. Hey guys, before we get started, make sure to hit that subscribe button below the video to ensure you do not miss any future videos I post. Make sure to leave a comment below saying you subscribed, and I promise to respond personally to your comment. Alright guys, you know how I never like to waste your time, and I always like to deliver massive value every time I jump in front of a camera, so without further delay, let's jump right into the video. Just so you know guys, you're looking at my monthly dividend stock spreadsheet, which is something you can get access to by joining the Patreon community, where for as low as $5 a month, you can get access to the spreadsheet every single month. I update it myself, and it includes all of the dividend stocks out there that have been paying and increasing their dividend every single year for at least 5 years. In this spreadsheet, I share with you not only the dividend yield, but I share with you the 1, 3, 5, and 10-year growth rates as it applies to that specific dividend stock. Also, I have manually calculated, and I mean when I say it, manually calculated 734 different stocks, the dividend payout ratio based on free cash flow. The standard measure of dividend payout ratio is usually with net income, and I've shared with you in a number of videos in the past, which I will link in the description below, exactly why I don't use the standard calculation for the dividend payout ratio with net income. I use free cash flow because dividends are paid with what? That's right, cash, not net income. If you'd find some value out of joining the Patreon community, go ahead and take a look. There's a link in the description below. As you can see here, there are a lot of different dividend stocks to choose from, 734 in fact, all of them with ranging dividend yields, dividend growth rates, and dividend payout ratios. But for the purpose of this video, we've narrowed it down to 5 different dividend stocks that I think would be a great fit, potentially for your portfolio, definitely a fit for mine. Alright guys, without further delay, the very first dividend stock we're going to talk about is one I already own in my portfolio, and that is Westlake Chemical Partners Unit. Ticker symbol here is WLKP. Now, for full awareness, Westlake Chemical is known as a master limited partnership, which is treated differently with respect to how their dividend is taxed and how the overall company is taxed as well, because it's able to bypass all of the corporate taxes as long as it meets certain criteria, and as a result, they can pay a higher dividend yield. I've talked about Westlake Chemical before in previous videos. It is a company that is connected with Westlake Chemical. They've been paying dividends, also known for full awareness here. They're known as distributions with respect to a master limited partnership because you're not a shareholder in the company, you're a partner in the master limited partnership. So technically, we're talking about distributions, but for the purposes of this video, we can call it a dividend. It's been paying consecutive dividends for 7 years, which is when the company was actually formed. It's a dividend challenger then because it's been paying dividends between 5 years and 10 years. Current price per share as of March 26th, $24.52 a share. It has an annual dividend of $1.89, which leads to a yield of 7.69%. It's got a 1-year dividend growth rate of 4.73%, and then 9.39 for the 3-year and 5-year 10.43. I usually only look at dividend stocks that have a dividend growth rate of at least 4%, and you'll see here one of the companies here on this list paid 3.05% over the past year. I'm giving a little bit of leniency due to COVID here. If the company continues to pay their dividend, they're a great fit, and if they have a 1-year dip in their dividend growth rate, that's not a real big problem for me, extenuating circumstances. Additionally here, Westlake Chemical Partners has a dividend payout payout ratio based on free cash flow of 16%. I'm usually looking for a company that pays less than 75% unless it's a master limited partnership or it's a real estate investment trust. Because of their corporate structure, they're required to pay out a certain amount, so I'm willing to go above 75% up to at least 85% for a master limited partnership or a real estate investment trust. All right, second company we're going to talk about here on the list is Manulife Financial Corporation, ticker symbol MFC. This company is in the financial sector and it's been paying consecutive and increasing dividends for 7 years now, which makes it a dividend challenger. Company has a stock price of $21.47 a share and an annual dividend of $1.12 per share, which leads to a current yield of 5.22%. As you may or may not know, dividend yield is constantly changing based on whatever the stock price is. The annual dividend doesn't change usually for a whole year, but the price is constantly changing, which means the yield you capture at any one time could be different. Could be 5% today, could be 5.21% the next day. In 2 months, it could be 6%. It's a factor of the annual dividend and the stock price. It's a very basic measure to know how much value you're getting out of the stock. If you take just one dividend stock and on 1 month you're able to buy it for a yield of 5% and then 2 months later you're able to buy it for 6%, that's a better value. And that reflects that the stock price is lower now than it was 2 months ago. One of the things I love about Manulife Financial is their dividend growth rate. As you can see here, 12% on the 1 year, which means during COVID, despite COVID, they raised their dividend by 12%. 3-year growth rate, 10.95%, 5-year growth rate, 11.16%, and 10-year growth rate, 7.97%. I also love the fact that Manulife Financial has a dividend payout ratio based on free cash flow of 14%, and that's despite COVID-19's impact. All right, third company we're going to talk about here on the list is one that I really love and I own in my portfolio, which is AbbVie, ticker symbol ABBV. AbbVie is in the healthcare sector of the economy, and they've been paying dividends now for 9 consecutive years. Though you should know that AbbVie was split off from Abbott Laboratories. So really, when you think about the fact that Abbott Laboratories is a dividend champion with over 50 years of payments, you can really think of AbbVie as a dividend champion. But technically, because it's only been split off from Abbott Laboratories since for 9 years now, it's only considered a dividend challenger. AbbVie's price per share, $104.34 per share, and it's got an annual dividend of $5.20 paid quarterly, which leads to a dividend yield of 4.98%. It's also got a 1, 3, and 5-year dividend growth rate of 10.28%, 22.62%, and 18.5%, which means that despite COVID-19, it still rates its dividend by over 10%. Also, AbbVie has a dividend payout ratio based on free cash flow for the most recent fiscal year, and this is as of December of 2020, so it's relevant, and it includes all of the COVID-19 impact. It's currently 49%, which tells me 2 important things. Number 1, the dividend is safe. Super safe, and it tells me that they can continue to raise the dividend in the future. All right, fourth company on the list here we're going to take a look at here that I think is a great fit would be Store Capital Corporation. STOR is the ticker symbol. So Store Capital is known as a real estate investment trust, or a REIT, which means that it invests primarily in real estate. Now, I've talked about Store Capital in a previous video and why I purchased it and why I like this REIT more than any other one. So Store Capital is a dividend challenger. It's only actually been in business for 6 years, and it's been raising their dividend every single year for those 6 years. It's got a current price per share of $33.55, and an annual dividend of $1.44 per share, which leads to a dividend yield currently, as of March 26th, of 4.29%. It's got a 1-year growth rate of 5.22%, 3-year growth rate 6.12%, and 5-year growth rate 9.79%. And remember what I said about real estate investment trusts with respect to their dividend payout ratio. Because of their corporate structure, they have to pay out at least 90% of their taxable income every single year. So as a result, they're going to have a higher dividend payout ratio based on free cash flow. That's acceptable. And as you can see right here, it is 83%. As of December of 2020, which includes all of the COVID impact, which is relevant information. All right, fifth company we're going to take a look at here is First of Long Island Corporation, ticker symbol FLIC. FLIC is in the financial sector of the economy. It's been paying dividends now consecutively every year for 25 years, which makes it a dividend champion. Now, First of Long Island Corporation has a current price per share of $20.42 per share, and it's got an annual dividend of 76 cents, which leads to a current yield of 3.72%. Now, generally, the rule is that dividend champions pay lower yields than dividend contenders, which pay lower yields than dividend challengers, though there are certainly many exceptions to the the rule. Generally, a company, the longer it's been paying dividends, the more solid it is, the more foundational it is, and as a result, it pays a lower yield. First of Long Island Corporation has dividend growth rates of 5.8, 8.6, 7.3, and 7.19% for the 1, 3, 5, and 10-year growth rates. And its current dividend payout ratio based on free cash flow for the most recent fiscal year, which ended December of 2020, which includes COVID, is 35%. And then lastly here, I've got our bonus dividend stock we're going to talk about, one that I have said no to in the past, that I'm actually looking at, taking a second look at. I'm not sure if I'm going to add it to my portfolio, but it's one that you might take a look at, and probably some of you actually already own it here, and that is Altria Group. Ticker symbol MO. I know that some people on YouTube have mentioned that they won't invest in Altria Group because they are in the tobacco industry, which, you know, that's fine if you want to say no to that. I've personally said no to Altria Group consistently in the past due to their dividend payout ratio based on free cash flow, which has consistently been north of 85-90%, which to me signaled it to be a very unhealthy or a stock that could cut its dividend in the future. However, based on the most recent data here, December of 2020, their payout ratio based on free cash flow is down to 77%. I'm not sure if that's a short-term lower amount because people are maybe smoking more. There's more tobacco being consumed because of COVID. People are at home more. I don't know. I might give it more time to see what's going to happen with that company, and their dividend growth rate here for the 1-year growth rate is only 3.05%, whereas historically it's been over 10%. So I might just kind of wait and see with this company, but it might be one that you want to add to your portfolio because it's got a pretty good dividend yield. Current price per share, $51.60, and it's also got an annual dividend of $3.44 per share, which leads to a current yield of 6.67%. And like I mentioned, that payout ratio based on free cash flow of 77%. Okay guys, so we've got our 6 different dividend stocks that we can take a look at, and we can test them based on the actual dividends paid and the actual price history going back to March of 2016 through March of 2021. What happened if you'd invested on a monthly basis every single month during that time period, or consequently, what would have happened if you'd invested a lump sum of money in March 2016 in each of these dividend stocks? What would have happened? I'll tell you what happened because I've got the data to back it up. As you can see here, we've got all these contribution amounts, the actual price history, the actual prices, the dividends, and what would have happened with a lump sum balance as well as a monthly contributions for each of these 6 different dividend stocks. You're going all the way down from March of 2016, actually April of 2016, all the way through 2021. So here are the assumptions here. For the contributions, we're just going to assume a very reasonable number, which is $250 a month. And for the lump sum, for those of you that are closer to retirement who have a larger amount to invest, I went with $50,000 as a lump sum investment. I really do think that $250 a month is reasonable for the average Joe out there. Now we can also test this, and maybe I will test it and show you the difference if we invested $500 a month or $1,000 a month. For our first test, it'll be $250 a month and $50,000 as a lump sum investment. All right, let's start here with the past 5 years based on the lump sum investment of $50,000. What would be the dividend income for the trailing 12 months after 5 years, and what would be the holding value after 5 years? Let's take a look here and go ahead and reveal these numbers we've got here. All right, this is very interesting. We've got quite the range on the dividend income as well as the holding value. You've got here one that's $105,000 and one that's $53,000. So we got Westlake Chemical here at $6,700 in dividend income for 1 year, after the 5th year, of course. And then we've got a holding value of $91,000. The top holding value by far is AbbVie with a portfolio value of $105,800.64. But it didn't have the highest dividend income. That actually went to Westlake Chemical Partners at $6,704.62. There are some lagging investments here. For one, look at the dividend income from First of Long Island Corporation, $2,032.24. And then even more crazy here, we've got 2 companies that their holding value pretty much stayed about the same, which is Altria Group at $53,240. You invested $50, you only had $53 after those 5 years. And then for First of Long Island Corporation, we've got 50 into 56,926. So worst performing here does by far appear to be First of Long Island Corporation. If we take a look here at Altria Group, for example, in April of 2016, the price per share was $62.71. That actually was the price. And if we look here all the way down at March of 2021, the price per share is only $50.19. So the price essentially went from $62.71 per share in April of 2016, and it went down from 62 all the way to 50, yet you still have have a balance that is above what you started with, and that's the power of dividend investing. Even if you pick a dividend stock that doesn't have a lot of capital appreciation but continues to pay its dividend, you're still going to have an investment that's going to continue to pay dividend income every year, and you're going to have usually more than you started with. You cannot say the same thing about growth stocks. Yes, some of them perform absolutely amazingly well, but sometimes they don't, and when you don't, you have nothing left to show for it except less money than when you started with. So based on just a 5-year lump sum investment here, it looks like the best option here has got to be AbbVie, or potentially if you're looking more for dividend income, Westlake Chemical. Now, how do the results change if we're looking at monthly contributions of $250 a month? The top performer here is still AbbVie with a total portfolio value of $22,169.29, and it got third place with respect to dividend income. Top result here was for Westlake Chemical Partners at $13.24 followed by Altria Group at $969.05, and then third place goes to AbbVie at $911.94. Again, if you have access to the spreadsheet as part of the Patreon community, you can go ahead and play with these numbers here. You can change the contribution from $250 to $500. Changes the results here. Same thing for the lump sum. If you wanted to do, instead of $50,000, you wanted to do $10,000. You can totally do that, and it's going to change the results right there for you. You don't have to do anything else. Make sure before you leave this video, guys, that you leave your 2 cents in the comments below. Let me know which of these dividend stocks you already own, which of them you might go and buy based on the analysis we're doing in this video for you, and everything in between, guys. I want to hear from you. I want to hear your feedback and which other videos you'd like to see more from me about, because you know what? If I made videos for myself, I don't think anyone would watch them. I make videos for you guys to add massive value to your lives and to your investments. That's all I got for you guys. Have a great rest of your day. Happy dividend stock investing for the rest of this month, and please continue to stay healthy, both physically and financially. Have a good one.